Hey everybody, welcome to Pro Trader Strategies Market Commentary. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind, everything we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we are here to teach you some different strategies you can implement in your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. I don't even need my glasses for this because there wasn't any. Nothing to really speak of anyway. Across the pond, not a whole lot going on here, and it being the United States, a Monday is very light for economic data. We do have Williams speaking, who is a FOMC member, and we'll have to see how that all goes, especially with what happened over the weekend. Basically, Trump comes out and says those 10% tariffs for China are going to increase to 25%. So that's what caused the overall markets to literally spin out of control, what it seeming like for the entire overnight session. As soon as the markets opened up, we started rebounding, which is what I was expecting. I talked about this on Twitter. You know, it's a little overdone at this point until we really see those tariffs jacking up and how that's going to affect us. I don't think it's going to affect us in the near term. So I believe we are still going to get that bounce based on the economic data that we were getting last week that was pretty darn good, right? I talked about that. We are looking like we are going to be going for historical highs. So taking that opportunity to take off any shorts that I had, basically, I am very net long now. Let's look at crude oil inventory, or crude oil, just slightly in negative territory, higher on the day. You know, we talk about this all the time with the way that we're getting this doji set up right here, how they're counter opposing. That to me is a continuation pattern that we are going to continue to slide and maybe even come down and test this $59 a barrel area. We're still in the 60s, but breaking that 60 psychological level and then, you know, printing in the 59. So I think we'll probably see that this week. One thing to note here is that we do have the 50-day and the 200-day moving average, simple moving averages crossing over, which is usually an indication of a bullish move, right? So when we see, let me pull up my marker here so we can start marking up the charts a little bit. But this is what I'm talking about with these two dojis here. Counter opposing usually gives us the continuation pattern to test this area here. We do have the 200-day and when you see the 200-day go simple moving average, cross under the 50-day simple moving average, this is usually a cross that indicates the market is ready to start to continue to go higher. All right, so we're going to have to watch that right there. I think we're going to come down and test this $59 a barrel first before we get that resumption, and that still could happen because the way that this is setting up with that 200-day and the 50-day trying to cross over right now, if the market continues down, this 50-day simple moving average will pull away from that and never get that real cross. I've even seen it before where you'll have the 200-day like this. The 50-day actually looks like it's crossing over, probably closer to here, and then as the market continues down, it pulls that line back down so it never really looks like it crosses. So just because it crosses right now does not mean that it is the indication of a bullish move right now. It can take a little bit longer to work itself out and make sure that that cross happens. If that makes sense. I hope it does, but you know what I mean. As the average starts pulling down, it can pull that top line down a little bit. All right, gold futures, they were spiking off of the equities in the tank this morning, as one would expect. You're pulling money out of these assets that are higher risk than gold, which is a flight to safety. That's what I think we were seeing this morning. Now when you start to see the market flip and rally, they're going to pull it out of the gold and stick it back into the equities again. Bonds, they spiked huge this morning because, remember, we talk about this all the time. When interest rates go down, which we would expect if interest rates were to go down off of some of this bad economic omen ahead of us with the tariffs, if we expect interest rates to go down and we have our teeter-totter, well, then that means the price of the bonds go higher. So this chart is the price. So when we're trading up in here, we know that the interest rates are expected to go down further, all right? So now we're seeing the equities rebound, and this teeter-totter is coming back in line. I don't think that we're going to see lower interest rates. You know, in 2019, I'm still sticking with that mantra. The one wild card is the tariffs. The tariffs could easily and quickly slow down the overall economy. VIX, huge spike this morning off of that volatility. You know, anytime you get those crazy kind of tweets coming out of Trump or even a FOMC member, which we used to see when Greenspan would do the conundrum on the markets and the equities and stuff like that, when you start seeing those type of talking heads come out and shake things up, this is what we see happening in the VIX. And they spiked up into the 19 handle earlier this morning. So the overall markets now, with the equities rallying, they're going to pull some of that volatility out, but there's still a lot of stocks out there you can find some volatility in. Now, Dow Jones Industrial Average off of the open of the overnight markets was printing negative 500 points on the day. You can see we're only down 175 now. This doesn't take into account the overnight session as well, because it is an indice based on the day session. So we can see pretty much right off the bat, we got a slam down on the open, and then the market immediately recovered. We'll see a little bit better representation of that when we pull up the E-mini S&Ps on the daily chart. Now, NASDAQ was down over 180 points. We've made back about 100 of those, as you can see here. It looks like we are going to try and print a positive number today. I was going back and forth with some people. I said 11:11 Pacific, which correlates to 2:11 on the East Coast time. So we'll have to see if my prediction comes. I think it's going to come closer to the end of the day where we see a late day surge. But 11:11 was the number I came up with for my time, which is equivalent to 2:11 on the East Coast time. Then let's look at the E-mini S&Ps. Now, we talked about some of these charts where we had the counter-opposing dojis. We're not getting that right now. You know, we had this one. That one looks like a continuation, but we got the spike higher. And now today, we've got this nice doji here that really is looking like it is finding a support. Came down, tested the value area high, and are rebounding. This chart looks like it is green. We should be positive. As you can see right here, we are in negative territory still by about 24 points. But, you know, we were really looking pretty desperate. As a matter of fact, I think it was down closer to 80-some points at one point. And only 24 points away from a positive market here. So we could make that up. I don't know if it's going to happen today. I had a bold prediction thinking we would turn it around as people came in to find value for that market. All right. So then let's take a look at the E-mini S&Ps on the daily chart. This is 30-minute candles. You can see, yeah, Friday's close and overnight, Sunday night overnight session open. Massive drop by over 35 points, almost 40 points here. And on that market, you can see there was almost unabated selling to the downside. A little bit of overnight inventory being short. They got flushed out, but you can see on the open here, we got the open right here at 6:30. The market did take a dip, but unabated to the upside until right now in this candle here, where we're starting to see it get a little bit toppy. And maybe some longs will start to cover here, get a little bit of pullback. But I think for the most part, people are going to brush off this tweet, and we might even see Trump try to brush that tweet under the rug, if you will, and trying to hide it. But right now, looks a little toppy. I don't think that it's going to be much other than maybe some weak hands covering. But late in the afternoon, I think we're going to see a late day surge again. All right, Honeywell is a trade that you guys know I have on. Remember, I had this on for the earnings. You can easily see here it was a loser, and I had on the sorry, let me pull this up. I had on the 167.5 puts that I was short for that earning, or sorry, 167.5 calls. I was short these. I took it into my account, became short the overall underlying, and then if you guys remember, I sold the 165 puts in there. So I was trying to capture a little bit of a spread. If we came down and tried to cover this gap right here, that's what I was looking for, a bit of a move, and then come back down to cover that gap. These 165 puts, I collected about $1, let's say $1.85 on those. So I was protected all the way up to 169. My break even was 169.30 or something. That was my break even on these, okay? Because of this collection on the puts. This morning we sold off. I think the low was somewhere around 170 something. I got out of these at 171.35, I believe, is where I got out of my Honeywell short. So I lost, as you can see here, from 167.50 to 171.35. So I lost almost $4. So losing $4 on this trade, but gaining back the $1.85, which I think it's right now, these are worth about 45 to 50 cents. Let's call it 45 cents. So, I lost a little less than $3 on that trade right there. So not very happy about it, but adding those short puts in there to create that spread did help me increase my break even. So although I didn't get out at that break even, I still lost money on it from 169, 169.30 to 171.35. That helped out quite a bit, right? It helped me out by almost $2 in a sense. So nice little reduction. Staying mechanical. Yes, it was still a loser, but we did manage that and increase our success rate by adding those in there, right? We gave ourselves a chance. It didn't kind of work out exactly the way we expected, but nonetheless, selling those puts, staying mechanical, staying with this trade helped out a little bit there going forward. All right, so the other trade that I have on that is a loser that you guys have been keeping an eye on is this Google trade. And with Google, it being on Friday, I got assigned the stock at 1,200. So I am long. I could just have the thing know when I'm using my pen to opt for that. So with Google, I am long at 1,200 on these. So I am long Google now at 1,200. And I haven't added anything like selling calls against it yet. The calls that I would be selling against it aren't probably going to garner that much. Plus, I'm with me taking this stock into my account, my margins are pretty tight right now. So I'm going to hold off on this. I think Google's going to continue to rally. I really don't think that Google is going to go out of business, and we are going to continue this move up. We might settle down here right now, but I'm not too worried about that because I got the stock on. I don't have to worry about the theta and all of that stuff, all right? So I'm looking for this market to start moving higher, but I have not added anything to this trade here to lower my break even and do a few of those other things like I did with HON. I still have on those puts per HON, just so you guys know. They're worth like 30 cents, but I'm going to let those continue to decay out. All right, that's all I've got for you guys. Like I said, I haven't added anything today because I've got to manage some of these other things with me taking the Googles into my account that it's eating up a little bit of my margin right now. So we're going to be full champions of Google right now for the next foreseeable future. All right, that's all I got for you guys. Nothing else really going on today. If I do, I will tweet it out on Twitter. So follow me on Twitter at Wolfman's blog, or at Wolfman's blog. Also, comment at the bottom of these videos. If you want to see some other charts, you want to see a different underlying that I don't normally show. Maybe it's IWM, the Russell, or something like that. Throw it out there, put it in the comments, and we'll try and implement some of those things for you so we can make this all bespoke to everybody. All right, that's all I got. If you can't take that, take it easy.